I'm with Graham McNamara, Managing Partner of Metrics Credit Partners. Welcome, Graham.
Thanks, James.
Graham, what do you think really sets Metrics apart from other managers in this space?
Look, I think it's probably, going back, the size of our team. We established the business with 3 people back in 2013 when we launched our first fund. We've now grown that to a team of over 70 people, focusing on the origination and portfolio management of good quality credit assets in the Australian market. I guess the other thing that we've done that's quite different is we've established a whole range of different funds. We've got 13 different funds, which provide investors with unique access to the asset class, depending on what their risk return and liquidity requirements are.
So how do you see the overall credit market evolving from this point?
Look, I think the trend is certainly there, and I guess if you look at what's happened overseas over the last 20 years in the US and Europe, there's definitely been a shift away from banks being the sole provider of debt capital to corporates into the non-bank lender space, and I think that trend will continue in Australia. It's already started. I think post GFC, the Australian banks held about 80% of all corporate debt on their balance sheets. That's now down below 70%. And the slack has really been taken up by some of the new entrant non-bank lenders in that space.
Graham, from your perspective as a lender, how do you see the health of corporate Australia? And I suppose I'm asking there, what do you hear from management teams of your borrowers in terms of what they're expecting as we hopefully come out of COVID?
Look, it's actually been very positive, and just looking across our own book, which is probably fairly representative of the Australian market. We've got 180 odd borrower exposures, and what we're seeing from them is it's as though 2020 didn't happen, and so their performance, for this year, is actually ahead of where they were 2019 actual. So it's kind of like, forget 2020, that was a bit of a blip, and businesses are actually performing very, very strongly.
Graham, what's the current split of your book, and how do you see that changing, if at all, as the economy normalises?
Look, I think, our book is, we've got $7 billion in assets under management. It's diversified, right across the credit spectrum. It's diversified across industry sector. I think, we've got a reasonably heavy weighting towards real estate, but when you think of the Australian economy, that is a large driver of economic activity in Australia, so it's kind of right that we would have that. Look, I think we don't really expect to be too many changes in that. We'll continue to participate, across the market, across industry segments, across loan types, and providing our investors with as much diversification as we can possibly provide.
Thanks for your time, Graham.
Thanks very much, James.